If you've only been trading for a day, 10 days, a year, 10 years, and you don't understand market structure, you are severely hindering yourself from reaching your full potential. That being said, welcome to Pips to Profit. My name is Cameron, and in this video, I'm giving you everything you need to know about market structure so that you can time your entries appropriately and trade in the correct direction. Even if you don't have a strategy or know anything else about the markets, just understanding market structure is a huge step in the right direction. All right, so jumping right in, why is understanding market structure important? And it might sound like a silly question to some, but for others, it keeps you from getting in early or getting trapped. It identifies current market direction, solidify entries, and identify areas of interest. Even if you know nothing about trading, knowing market structure already gives you an edge. In combination with trading setups, your edge grows and you can become even more consistent. Something important to note is that markets are fractal. So whatever is happening on a higher time frame is also occurring on a lower time frame, and the market always has an agenda. So whatever's happening on the higher time frame, things on the lower time frames are all working in unison to accomplish the market's goal. So if there's a market structure on a higher time frame in the lower time frames, there will also be some form of market structure in a series of pullbacks. There will be breaks in structure on lower time frames that are just all a part of a higher time frame. But I know that sounds a little bit confusing. So if you're, completely new to this whole thing, don't let it get to you. I'm gonna narrow it down and make things a little easier to understand. Here's a slide about, let me move my face. Hold on. About fractal markets, okay? So we have a 15-minute chart, and I just want you to focus on this upswing right here. We have, I don't care about anything that's gone on over here. I just want to focus on this one upswing, right? So this is technically this within the larger trend of the market. This is a trend. We have a push up, push up, push up, blah, blah, blah. So this is now a 1-minute chart, and you can see the series of swings. And I know that, the 1-minute chart for a lot of people is very confusing, but I think by the end of this video, you're going to understand why it is not confusing. So you have a series of swings, you have a series of pullbacks, and obviously the market was moving up until it no longer wanted to go up. It wanted to turn around and go back down. And the question you need to ask yourself is, why at one point did the market stop going up and want to come back down? And what early indications do we get that can tell us, wow, the market's about to turn, maybe I want to be involved in a short? Or maybe the opposite question, has that thing happened yet? Do I need to be shorting this market? Has the early indication not presented itself, and I'm just waiting? It's just a big waiting game for those things to occur. So, like I said, same swing, smaller time frame. Major and minor swing levels. And this is where the really, truly important information starts to come in, because you need to understand that within every trend, there are major and minor swings. Every time frame has major and minor swings. The main swings, swing high, swing low, shows the longer term trend direction. And then the minor swings can sometimes display a shorter term trend direction, or they can also be areas where the market will stop hunt liquidity so that it can move in its intended direction. And again, I understand that's probably confusing, but I will go and show you with pictures. Higher high, intermediate, in a downwards moving market. Intermediate, I'm talking about these minor swings. Okay, so intermediate, I'm talking about a minor swing in a downwards moving market. Could signal temporary uptrend, but must wait for a pullback entry. Okay, now I'm going to break this down. We have main low, main high. When I say main, I'm talking about major. So major low, this is a major high. Market comes down. We break this major low. Okay. Within the smaller trend, we have a minor low, minor high, a lower low on this minor low, okay? the market shoots up and takes out this minor high. So you have to think about it like two trends. We have the main trend, or the major trend high, the major trend low, which was now broken, and we have a minor low formed, minor high, a lower low. This lower low confirms this high. So this is now considered a minor high. So when the market reverses and takes out this minor high, that can signal that the market could be about to flip and go the other way. But look what I put here. I need to wait for a pullback for an entry, because most breakouts fail and they trap people in the wrong direction early, the first mouse, and will pull back to run stops or get people going in the wrong direction. Whatever. Remember what I said, the market runs on liquidity. We have people triggered into the market early, they come down. Where are the stops at? The stops are under this level. They come down, hit the stops on the people who went in long early. They come down and trigger people short. Now people are short in the market. Market pulls back inside, reverses, and goes in its intended direction. Now, we are still in a downtrend at this point. This is a major high, major low. We just made a new low. Okay? When the market comes up here and does not take out the high, comes down, we have now taken out that high. So we have now made a higher high. That is a first indication for the market that it might be flipping around the major trend. The main trend could be flipping. We make a higher high of the major trend. Previous down moving market could turn into an up moving market. Must wait for a pullback to confirm. I should highlight this. I never trade a breakout, because there is always going to be, I say always, generally or typically there will always be some kind of stop hunt low before the rise after a new high is formed or a new low. So we have this new higher high formed, and I'm waiting for the pullback for the low to be formed for the continuation back up. Break of structure. I probably said this a couple times already. Main and intermediate. Hold on, I'm going to fix this. So we have our major, which signals a longer term trend change, and the minor, which could signal a shorter term trend change, or like I said, could be a stop hunt on liquidity. And it could be a continuation of the major trend. In combination with trade setups, such as 3 weeks of previous week's high or low, 3 days high, low, first red day, first green day, etc. And understanding of this style of trend analysis becomes far more effective. So basically what I'm trying to say is, once you understand market structure and you combine it with actual trading setups that you have, this understanding will accelerate you even further. And I'm going to get into some more of that here now. Mastering the pullback. Because remember what I said back here. I have to wait for this pullback entry. So what is my criteria or my understanding of these pullbacks? You know, some people will use the Fibonacci's. Some people will use whatever to try and gauge where it's going to come back to. This traps people in the wrong direction. Market will retrace to induce the opposite side of the market to commit liquidity. So if the market wants to go up, it'll start going back down to get people to short. Meanwhile, the people who really know what they're doing are going long, and they are in the right direction. Stop hunt, people in early. Remember I said they come back and get everyone's stops before moving back up. So after a break in structure, higher time frame, 15 minute, 1 hour, is when I'm looking for 3 levels of rise or fall. So in this case, right, I don't have it measured on here, but I just want to show a picture example of what I mean. We have a break in structure, so I can now look for 3 levels of drop. That could be with the price. So this over here, I could look at the price and say, how many pips of drop do I need to get a strike zone? So like, let's say this is gold. If this is 300 pips, I can't really read this over here, but I'm just as an example, 300 would be 3 levels of 100. So if this were to come down 300 pips, that would be like 300 or 3 levels of drop, giving me my 3 levels. I can also look for 3 pushes. So like 3 levels of price action drop. And that could also be my indication that we could be about to get in. Measure from low of day, high of day, a minimum of 75 pips for potential strike zone. And that is, again, that can be used for the major trend or the minor trends. So like in this instance, where we have this minor swing level right here, and it's broken in this previous day. So what I could have done is measured from the previous day's high down 75 pips to look for a potential strike zone. Now this is gold, so the market will move a bit further, but like in currencies, 75 pips from the high of the day to the low of the day will give me a strike zone, ideally for 3 levels of drop, 3 levels of 25, and also the understanding of previous day's low, there's liquidity down there, etc. So here are some more examples. All right, we have a low and a high. So once this market comes down and puts in a higher low, all right, but the important thing is it does not take out this low over here. So we have no break in structure, okay? That means the market still wants to go up. We make a higher high, which creates this low right here as the new higher low. Once we make a higher high, it confirms that this is the low. Mark the higher high, comes down, breaks that higher low. So now we have a break in structure. And in this instance, right here is the low of the day. Obviously, this kept going down. I'm talking about right here, before this all happens. We have the low of the day, and the market comes up 75 pips off of that low of the day after a break in structure on a higher time frame. This is the 1-hour chart. This is a consolidation at this point. So they come out of consolidation 1, 2, 3, engulfment on a 1-hour chart. Consolidation, come out of consolidation 1, 2, 3, engulfment. That's a 1, 2, 3 engulfment on a 1-hour chart. 15-minute chart. Same thing. If you were just looking at the 15-minute, come out of consolidation. 1, pause. 2, pause. 3, pause. Stop hunt to the high, reversal. This is now a M with a 15-minute chart, also considered a head and shoulders if you look at it like that. Engulfment, pin hammer, 15-minute chart, and the continuation back down. After 3 levels of rise, after a break in structure on a higher time frame, 1, 2, 3, back up into the high. You can see this swing high right here acted as a liquidity level, and once it was taken, liquidity was taken, we had our M and engulfment and the move back down. This was also the Asian high, the high of the day. So the breakout of the Asian highs fails and reverses. Mastering the 1-minute chart. I had said that a lot of people are very scared of the 1-minute chart. It seems very clouded or busy. But once you have an understanding of market structure, you have an understanding of when is the market ready to go back down or to go up. Where are the pivots and where could the market be setting up for the move in the opposite direction? So with a higher time frame bias, 15-minute or the 1-hour, I'm waiting for price to get to my area of interest. I'm waiting for 3 pushes on a higher time frame. I can also look for these 3 pushes on a 1-minute time frame, of course. And for the 1 minute to change market structure to align with the higher time frame. Look at this. We have a break in structure on a higher time frame. Once we get 3 pushes back up, I am now on a higher time frame, or I'm sorry, on a lower time frame at my area of interest, the high of the day, the high of the Asian session, after 75 pips of rise. So that gives me my strike zone. I would be on a 1-minute chart. I'm looking on that 1-minute chart for the overall trend is now down, but the intermediate or the short term or the minor trend is up because we're obviously moving up. So I need the 1-minute chart to now tell me it's ready to go down. Basically looking on the 1 minute for it to change market structure, to shift from bullish to bearish, or in the opposite direction, break of structure to the downside. So same example, US dollar, Canadian dollar, from that 15-minute chart that I showed you going up. We have a swing here. This, obviously you can see this was a swing high here that confirmed this was the high. Now this is the low once this new high is formed, okay? So now this is the high, that is the low. All of this other stuff in here becomes irrelevant. When the market comes down and hits that low, we have a break in structure. And I'm looking for it to pump back up to give me a pullback to enter in. We have a break in structure, one push up, two pushes, the third push up. There was news in here, makes a lower low, confirming this as the high. We have a pullback now up into that high. Engulfment of the 930 to the downside. 3 levels of rise, time of the day. So you can see that, you know, this is a market structure class, but look at the time. The 930 open was right here. We've engulfed it. We have an M. These are all the things that, you know, go in our favor. We have a break structure to the downside, a pump back up 75 pips, 3 levels of rise. We have a now broken down market on the 1-minute chart, which aligns with our 15-minute, telling us that this market could be about to roll over. And obviously, from hindsight, you know that it does. Now, I've gone through and drawn this out to try and simplify it in a, you know, without candles. High, low. We get a higher high, higher low. Now, this is what I was saying. This low is not confirmed until we get this new higher high. Once we get the higher high, this low is confirmed. Good stuff. Now we get a higher low, which is confirmed by the higher high. Higher low. Now we get this higher high and this lower low, break in structure. What am I waiting for? I'm waiting for that pullback. Typically, I'm waiting for that pullback to be 3 levels of rise or 3 subsequent pushes. But just understanding the structure, you get a lower high, lower low, lower high, lower low, and so forth. Now, this is on the higher time frame, 1 hour, or 15 minutes. So once you get a break in structure in the 1 hour, the 15-minute chart, and this pullback, I'm looking on the 1-minute chart, okay? And just within one of these swings, so like let's say this 1, 2, 3, right? So we get the lower low right here. Just looking at this upswing right here, this part of my drawing where it's going back up, could be something like this. We have multiple pushes up, swings down, pushes up, swings down. Okay, this is where I look for my 1, 2, 3. 1, 2, 3. We have a higher high, higher low, higher high, lower low, lower high. That's where I look to enter. They break the trend line, and then the market will, of course, always look for liquidity. Nobody gets a free lunch. Nobody, you know, can get away scot-free. So we come up, go back down. Of course, this is just a drawn example, but this is the best way I can illustrate it for anybody who has never seen this. So, what everybody's probably wondering, you know, if you've been following my videos or you've been following any sort of trading strategy whatsoever, well, how do I use this in combination with a trading style or trading strategy? What is my trade identification? What is the setup that I'm looking for? So it's like signal days, first red day, first green day, inside day, 3 days previous level. Opening range initial balance, the weekly template. Am I trading 3 weeks of rise or fall? Am I at the high of the week, low of the week? Is this a 3-day cycle style of trade? Day 2, continuation of the peak formation low or high. Day 3, is it a reversal or is it a trend continuation? Combination of all of the above. High tier trade setup, like the 3 or 5 stars. You know, we have, let's say, 3 weeks of rise. We're at the high of the week. First red day, something like that. And it's day 3. That could be like a very, you know, probable or high tier trading setup. So just knowing what trade setup you're looking at is good. Then you're identifying market structure on your higher time frame. Is it playing out the way that it should? So like I just said, 3 weeks of rise. We have a higher high and a higher low. The market comes up and puts in a higher high. Does it come back down and break structure? Does it come down and break that higher low? Telling me we just broke that higher low. I'm looking for a pullback to enter in my session, of course. Major trend, minor trend, break of structure. 3 push variation to area of interest. These are things that I'm looking for. Lower time frame market structure, break of structure. So this is what I was saying. We have the break of structure on the higher time frame. Now I'm looking for the market to push back up or down. So once my higher time frame has broken structure and I'm getting my pump back up or my dump back down, I then am watching my 1 minute chart around my areas of interest to see the shift essentially in market structure, where it makes a lower low or higher high. We get a break in structure on the 1 minute chart, and then I'm looking for now the dump on the 1 minute chart, 3 pushes of some kind. So that way I'm now aligned with my higher time frame. And then I'm basically going through my entry criteria, and after I'm into the trade, my trade management criteria. And of course, all of those videos are in that playlist that I listed earlier, and I'll put them up here as well. All right, so this is my trade from today. And I want to point out that I was not expecting, a bajillion pips out of this. I did consider it a scalp, and I'm going to tell you why. We have a lot of weeks of rise. We're on 3 weeks of rise or so, and the market came down and essentially made a lower low. Okay, we've got this low down. Oh, God bless. There we go. So we came down and we put in a lower low. Okay. That being said, we need a pump back up into the high to give me a lower high. Yesterday was day 1 of the 3-day cycle. That is a breakout that has failed on this was previous week's low, as well as previous day's low. So generally, when you have a day 2 of the 3-day cycle, I'm only looking for trades in the direction of the breakout that has failed. But I had also had this note on my chart because of the 3 weeks of rise. Level 3 is up here. I think this is a selling area up top, and I was looking for a short trade. So we have, I'm gonna bring this back. I'm gonna dial it all back into market structure. We have a lower low formed, a major low formed. We come up, we've got this high right here. Actually, you know what? There's a better way of doing this. High, low, lower high, higher low. We come up and put this higher high. Higher low confirmed by this high. So when I'm looking at this, I am looking for 3 pumps or 3 pushes or 3 levels back up into the high because of the larger trend essentially. But it's also being aware that it is day 2 of the 3-day cycle. Maybe this is not going to be a full-blown reversal. And it might not be a full-blown reversal at all, but the opportunity for a scalp was at least there. We have a push right here. So a push, consolidation, a push, consolidation, and now a third push up into the high after previous day's high has been broken. We are at the high of the week, and it's Tuesday. So all of these things are in my mind. How many levels from there to here? That is 100 pips up. All right. How many levels of rise from the low of the week? From that new lower low that was formed? Well, there's 300 pips. About, where are we at? About right there. That's 300 pips. So we've exceeded 3 levels of 100. They come out of consolidation. 1, 2, 3 to the high. And I did not enter on this 15-minute candle at 9:45. But I did flip to the 1 minute chart when I saw this candle about to close. So let's go to the 1 minute chart. So remember what I said. If I have a pump up on the 1 minute chart, I now need my 1 minute chart to tell me it wants to go down. So here is the consolidation and the engulfment that I had just shown you. The break-in structure in my mind was the lower low formed on the 15-minute chart and the 1 hour chart. So I'm not looking for a break-in structure on the 15-minute necessarily. I'm looking for it on this 1 minute. So now you need to understand the market structure of the 1 minute chart. We have a low, we have a high, we have low. They come up and put in a higher high. Look, they broke it right there. That confirms that low right here. Okay. Boom. They come down and they put in a lower low, first mouse triggered in the market right here, broke structure. And they pump back up and engulf. I got in above 75. I think I got in at 80. It was like in the 80. Yeah, it was on this engulfment of this candle right here. So I entered right here. You can see that it came down through the trend line. I already had my break-in structure and a pump up and a collapse. We have a 3 push pattern, triple top up top. That's my pattern that I needed for my entry criteria, a break-in structure, push back up. So all my entry criteria was met. But understand that I was looking at this way back here. Okay, we had news, price contained within the news. And then it went higher. So I needed market structure to tell me it was going down, and it hadn't done that. We have a low, a higher high formed, a low, a higher high. They start to come back down. Do not break that low. So we don't have a break-in structure. And then they keep going up. So now we have a higher high. So, you know, if I would have saw this little M right here and they're breaking down and think, oh, wow, there's my M. I'm going to enter this market, maybe get in right here. I don't know, somewhere in there like this. They haven't broke structure. They haven't told me that they're ready to go back down. I haven't had my pump back up. So I would not have been following my rules. But with this understanding of market structure, I saw them come down and put in this higher low, and they continued, and I was like, okay, I just need to wait a little bit longer for them to tell me it's ready to go back down. This will not be my only video on market structure, but it will be the one that focuses most on it. In future videos, I will have a lot of talk about market structure, so referencing back to this one, just so you can gain an understanding of what I'm talking about in future videos will be important. With that said, I really hope this video was useful to somebody. If it was, do me a favor, hit that like button and subscribe to the channel. You'll have a wonderful day.